Hello, everyone. My name is Mariana Álvarez, and I am an accountant and enrolled agent here in Tampa, Florida. And it is my privilege and honor to have been invited to participate on this Congress. And I hope to be able to clarify some important issues related to taxes, immigration, and filing and of taxes in different forms that are the common forms that are used to on our day-to-day basis. And I'll be available to answer any questions. If anybody has any, I will provide my contact information in the end. So I'm going to start by sharing my screen. Okay, so we're going to be talking about the new 2022 tax changes and the importance of being compliant on filing taxes for businesses and individuals. So the major tax changes that are going to be happening, we're going to see that our differences then happen between the last couple of years where we came through the pandemic and the COVID and the stimulus plan and a lot of changes in taxes that causes major benefits during those years. So those benefits are now going away, and we are going back to pre-pandemic rules and regulations. The main factor we're going to see is the changes on the child tax credit. We're going back down to $2,000 per child. During the pandemic, we were hitting about $3,000 to $3,600 per child in tax credit. This is going back to only $2,000 per child. Another difference that we're going to be seeing is in the child independent care tax credit. This is becoming, getting dropped down as well. Is going to go back to be a non-refundable tax credit, which means that it will only lower your liability, but it will not provide you with cash back per se. And the dropping is going just maximum to the 50 to 35%, when only up to $3,000 in credit availability. Another major change is that we're going to be seeing is in the earned income tax credit, where the minimum age drop is going back up to 25 years old. During the pandemic, we saw the age dropping to 19 years old for eligibility. We're going back up now to 25. So which is going to mean that less individuals are going to be eligible and having that credit available. So that is some important things to be aware of it and lower our expectations per se. The standard deductions has been changed. They have been making a small adjustment just to cover for inflation. So merit standard deduction is going from 25,100 to 25,900. It's only about $800 an increase over there. And for singles, we're going from 12,550 to 12,950. So just a little bit of adjustment, just adjusting for the inflation. The major and most critical change that we're going to see happening is on forms 1099-K. This is the form that is issued for when we use third-party payment processing, like PayPal, Venmo, Stripe, and other credit card processors. So up to last year, those companies were only reporting how many income or how many payments were processed if you have reached and passed the $20,000 threshold. So there's a drastic change over there for this year now starting. Those companies are going to be reporting that income if you process anything above $600. That is a major change that we're going to see in majority of our individuals and sole proprietorships or small business that process credit cards, that receive payments through Venmo or PayPal. You will be expecting that form to be finalized and be sent to you by mail or some of them electronically sometime around January, February of next year coming up. So that is a very important form and a very important information to be aware of, because once that form is issued and filed with the IRS by those companies, the IRS is going to be expecting that you then file your taxes showing that amount of income, if not more. So that is something that will be got to be very careful and aware and expecting that in the mail. A lot of Until then, if the individual or the small business did not receive that form, some of them did not file everything that they should be filing. So now it's going to be crucial that we receive that form and that you did send that form to your tax accountant so that you can have prepare the taxes accordingly and do not face any issues coming up. So those are the major changes, and in summary, majority of them is just that all the stimulus packages and the additional credits that were implemented in the last couple of years are now gone. We're back to the pre-pandemic rules and regulations per se. Another topic that I want to bring it in now, it is that it's the importance of being compliant with your tax filings and payments. So immigrants are authorized to work in the US, are required to pay the same income tax as citizens. So once you have that authorization to work, it's expected that you file and pay your taxes as if you were citizens. All income earned in the US must be reported, regardless of your immigration status. And that's where it comes that if you're a non-resident or if you do not have authorization to work, you must apply for your I-10 using the form W-7, and I'll go over the forms in detail in a little bit. Green card applicants, they must provide at least 3 years of taxes that have been filed and paid. So that it shows your good faith, shows that you're following the rules and regulations of the country, and shows that you are willing to follow what are expected of you. It's very important to be aware that failing to report your income or underreporting your income or applying for credits where you're not really entitled to, it is considered fraud and can have some very serious legal consequences. And again, I'm not an attorney, but I am aware of the implications of not being compliant. So it's very important that once you're coming into this country, and if you're making income and you're providing some sort of service, or you're getting some sort of work that you're getting paid, even if you're getting paid in cash, or if you're getting paid on a W-2 or whatever means it is how you're getting paid, it is very important to keep the compliance paperwork in there and getting your taxes filed with a reputable tax accountant to make sure that you are on track for those. I want to go over now with you guys over the most common forms where we see very often over there. So the first one that I want to see is the form W-4. The form W-4 is the form that creates a lot of confusion. That is a form that employees that were hired to work as W-2 completed in handed to their employer. And that is the form that's going to determine how much withholding taxes you're going to have it in your paycheck. So you can, and I'm going to show you guys here how the W-4 looks like. So this is our W-4. You're going to get your name, first name, your address, and then you're going to choose how you want it to file on your paycheck. That does not necessarily mean of how you're going to file on your taxes at the end of the year. This is how you want your taxes to be calculated for withholding purposes. So we have single and married filed separately, married filed jointly, or qualifying widower, and head of household. What this tells us is it puts you in a certain bracket of withholding. So if you choose to file your W-4 as if you were a single or married filing separate, that's going to put you in a bracket that's going to withhold the most amount of taxes out of your paycheck. So your paycheck is going to be less because your employer is going to be required to withhold more taxes in your behalf with the IRS. That doesn't necessarily mean that you're going to file taxes as single at the end of the year, but it means that if you file as single or married jointly, your taxes pretty much should be balanced out and you should not live on much or pay or have much refund. But if you chose single on your paychecks, but then you file taxes in the year as married with kids per se, that means that you withhold so much taxes that you might have some taxes back because now you're not just yourself or separate, you are married and you have kids. And that is true as well for the other positions. So if you choose to file married jointly on your W-4, your employer is gonna withhold a smaller amount of taxes. But now in the end of the year, you might have to pay additional taxes or might not have as big as a refund. So we just got to make sure how you wanted to, how you prefer to manage your money per se. A lot of my clients, they say, well, I want to file as single, let them take the most amount of taxes because in the end of the year, I don't want to worry about. And I have clients that are like, I'm going to put it married jointly so they can take less taxes. And when I get my tax bill at the end of the year, I will deal with that and I'll pay that. So this is one of the main forms over here. Our next form is the W-9. And a W-9 is just a confirmation form. It's a very simple form. This is the W-9 where you're going to put your name and what you are. So if you are a business providing services to another business, so you put your business name and how your business file taxes. And here you might need some help from your tax accountant if you're not very familiar of how you're filing your business taxes. You're putting your address, and here you're going to put your social security and your employer notification number if you're a business, sign and date in here. This is a very important form if you are a small business owners and you're providing and you are hiring contractors to provide services for you. You want to make sure you collect this form right before you even pay them, because this is the form that has information that you're going to need it to report their 1099 income in the end of the year. So your tax accountant is going to ask, so where's the W-9 for the contractors that you were hiring throughout the year? So this is very important, and we are required to actually collect this form before you even make any payments to them. The next form I want to talk about it is the form W-7. W-7 is a form that is used to request a identification number with IRS. So if you are not a citizen and you're not a legal resident yet, so you do not have a social security number, this is the form that you are going to apply to request an ITIN number, which it is an identification, individual tax identification number. So this is the form you're going to use it. Usually this form is filed with a first tax returns from the first year when you're here, or if you are opening a bank account that is a savings account that's going to require the bank to report interest, they're going to require you to fill it up this form so they can request an ITIN number. An ITIN is a substitute of Social Security, but with different qualifications for it and different rights. So you do not have rights. It's because you have an ITIN does not mean you have right for certain credits. There's certain tax credits that are only available for individuals with Social Security number. The next form I want to talk about it is the 1099 NEC, which is a very common form as well that we see with independent contractors. This is the form that you should be receiving it from or providing it to your contractors in the end of the year. So if you're having an accountant who's doing the bookkeeping for your business, in the end of the year, he's going to figure it out and he's going to know how much you pay for that certain contractor. And he's going to report it as an income to that person, which then legalizes an expense for your small business. But if now you're a contractor providing services to a company in construction, cleaning, janitorial or driving services, delivery services, you will be receiving those. If you're not getting hired as an employee, you should be receive those as a payment for contractor. When you receive this is the form that your tax accountant is going to need it to prepare your tax returns. And the income that is reported in this form is going to be reported on the Schedule C. Schedule C is the form we use to report income from a business from sole proprietorship. So if you are a sole individual who's running your own business, or you are providing services or for construction, for cleaning, or if you're providing cooking services, or you're making food for sale for your business, this is where you're going to most likely report your income. So the income from the 1099 will come over here on your gross receipts. You're going to have your name, what kind of business you're running, what's the code, and this is all information that your tax accountant will be able to figure it out as we're talking with you, and then you can explain what kind of business it is. So this is the form where you're going to calculate all your income and then put all your expenses, get to a bottom line, and that bottom line is the profit, and that's based on what is where you were going to base how much taxes you're going to pay. So it depends on how much profit you made it. The Schedule C is reported within the form 1040, and the 1040 is a very common form, is the form where we report our personal income taxes. If you are a non-resident, then you're going to report on a 1040 NR. If you are a resident, you will report on a form 1040, and this is just how the 1040 looks like. We'll get your name of the spouse, address. If you have any dependents, that will go here. Then if you have W-2 income or other business income, so creates all the calculations of your tax and tax credits. And this is just the first couple pages, depends of kind of income or credits or children you have. It's going to create different schedules that are going to come attached to it, but this is the tax accountant will take care of it and will know very well how to do this. I'm just trying to show you guys how the form looks like, because sometimes it can be like, I never seen the form, I don't even know how that looks like, what are we doing over there? So it's kind of like just an introductory explanation over here, and you and your spouse will have to sign this form in order to be filed with the IRS. Now, if you are, the difference between being an R and a 1040 is depends of your designation as a immigrant over here. So there is two ways that we can determine if you are considered a resident for tax purposes or non-resident for tax purposes. And two of them, the first one is how long have you been living in the US? So which means we call your presence status. So if you have been in the US for more than 30 days, you will be considered a resident, and you will pay taxes and you'll be required to file taxes as if you were a citizen. If you've been less than 30 days, then you're a non-resident, and you will fill it up the form NR. So there are a lot, that's just overall view of the basic, more common forms that we see it on our day-to-day lives here in the US, and the importance of being compliant. But if you have, Mariana, has any further questions, I am available to answer by email or phone call. I'll be happy to help whoever is just coming in here and trying to figure it out, how the whole tax situation and the legalities of being in the US, how does that work in terms of your taxes and your filings. So thank you very much. Please don't hesitate to contact me if you have any questions. And I hope that was a quick overall, but it's just a basic information of what we are looking here in terms of your tax situation in the US. Thank you, everyone. Have a great day. Bye-bye.